Hi, welcome to our new video which is on candlestick patterns. So before we start with the video, here is a disclaimer. I am not a SEBI registered person and the content here is for educational purposes only. So today's topic is candlestick patterns. So we will learn different types of a candlestick pattern starting from doji till Marabuzu. Okay, so what are candlestick patterns? So we can only see different types of a candles and how it works. So all patterns will only tell this either the market is bullish or bearish or indecision. Okay, so the first pattern what we will learn today is doji. So you can see the image here. So the above image illustrates the doji pattern, highlighting the market's tug of war. So what I mean by tug of war here, so there is imbalance. So not even the buyers are strong, not even the sellers are strong. So what is the structure here? So you can notice the thin body showing despite all the volatility during the session, the open and close were nearly identical. So very small body, long upper wicks, long lower wicks. So you need to try to understand the psychology here of buyers and sellers. So the long upper and long lower wicks represent a battle where both buyers and sellers tried to take control but neither could hit by close. So buyers push the price up and sellers push the price down. So finally what happened? The price closed near where it opened. So what this shows? So this shows balance between the buyers and sellers. So how it works? So doji is most significant when it appears at the extreme of a trend. So what I mean extreme, so whether it should be overbought or oversold or at a major support and resistant levels. So after a strong uptrend, so that will become a possible top, or after a strong downtrend, so it will become a possible bottom. Confirmation rule for this. So the next candle that happens, so the next candle should have a breakout and it should come with a strong volume. You also need to observe for some false breakout too. A high volume doji at a key level is the area where massive orders are being exchanged. So this often precedes a violent breakout. So never trade a doji in isolation. So it is an yellow light, so not a green light. So what you mean by yellow light and green light? You must wait for the next candle to break and close above or below the doji's range to confirm the new direction. So as you can see in the market, the next candle is breaking out with a good volume. So only after it is given such directions, so you can trade that market. So if dull market, so there might be some other scenario. So if you see multiple dojis in a row, it's a sign that market has gone flat. So in live trading, so this is usually a signal to step aside and wait for clear momentum candle to lead the way. So that usually happens in the sideways market. So you can see an example here, doji at the top, and after that what happened? So market came down. Okay, so our next pattern is hammer bullish reversal. So what do you mean by hammer? So by now you know like how the hammer looks. Okay, so similarly the pattern looks in that way. Okay. So what happens in hammer bullish reversal? So it's a confirmation candle. So you can notice the small green body at the top and that long lower wick. So this tail shows the exact moment sellers were exhausted and buying took control, or the buyers took control. So you can see small body and wicks will be like 2x of the body. Okay, how do you get the confirmation? Okay, or what is the psychology says? So sellers tried to push the prices down, but buyers came back and they observed all the selling, and they showed their strength. So how do you get the confirmation? So after the hammer candle, so the second candle should close above the high of the hammer. So this is your green light that the reversal has shifted from a possibility to a high probability move. And the pattern should, if you want to consider this as a most powerful pattern, so when it bottoms out near some support level or near ADR low or in an oversold area. So once you get all this structure, location, confirmation, you can trade that type of a candle. So there are other scenarios. So if the confirmation candle gaps up above the hammer's body, the reversal probability increases significantly. A lower wick that is 3x or 4x the body size is even more bullish than the standard 2x. So it shows a violent rejection at the lower prices. Okay. Sometimes there could be trap. Avoid trading hammers that form in the middle of a sideways range. So without a clear downtrend or support level. So that might be just noise. Yes. So you know the structure, you know the psychology behind it, you know the best location when to trade, and you know how to take the confirmation. So based on these factors, so you can trade hammer pattern. So here is an example. So whenever the hammer happens, so okay, so this is the downtrend and it is taking support at these levels. You can see the before hammer candle there was an doji, so which is giving us more confirmation, and then second the hammer. So you can see how the pattern or prices has gone up. So in this scenario, how do you trade these kind of scenarios? Okay, so after hammer high, so you should take your entry, and stop loss is hammer low, and target, so there is no fixed target, so you need to ride the trend. So whenever you feel like market is reversing up or there are different kind of a patterns that is appearing at the top, so you need to book your target. So that is how you need to trade hammer candlestick pattern. Okay, so which is our next pattern? So we call it as a shooting star, which is bearish reversal. The shooting star pattern is a critical bearish reversal signal that often marks the peak of the rally. So this is similarly opposite, it is completely opposite to hammer pattern. So you can notice the long upper wick, which is twice of the size of the body, and a small red candle, so which is appearing at the bottom. So the tail pointing up shows a significant rejection of higher prices. So that is the structure. So what is the psychology behind it? So the candle represents a failed attempt by buyers to maintain control. So they pushed the prices up, but sellers aggressively stepped in to force it back near the opening level. And how do you take the confirmation? The signal is only valid if the next candle closes below the shooting star's low. A spike in volume on this confirmation candle significantly increases the reliability of the reversal. And what is the best location? After uptrend, near resistance, near previous day highs, or there should be some kind of an supply. Okay, so you can also see some critical observations. The high of the shooting star is a major resistance level. If the price returns there and again fails, it often creates a double top scenario, so which will give you a double confirmation. So stop loss placement. So the fastest place for a stop loss is just above the high of the wick. While a red body is slightly more bearish, the location is far more important than the actual color of the candle. So what I mean here, sometimes the candle can be green. So even though the candle is green, if it is meeting the all other criteria, so it is a good trade setup. Let us observe one example. Okay, so you can see here, so there is some kind of an support resistance. Okay, and market was in uptrend, then it came little bit. Again in the second arrow you can see shooting star. So this is our trade setup. So it is break the second candle is breaking the shooting star. So that will give your entry. Stop loss is high and the target, as I said, you need to ride. So why we have booked the targets here? Because slowly you can see the market is reversing and the hammer pattern has formed. Okay. So our next pattern is bullish engulfing. So what is bullish engulfing? So bullish engulfing is one of the powerful signals that a downtrend has ended and buyers have taken complete control over the market. So how the structure looks? It consists of two candles, a small red candle in the downtrend and the next candle is large green bullish candle. The second candle's body must be fully engulf the body of the first. What I mean engulf, it should look like it has been completely acquired the red candle. So what is the psychology here? So during day one, so when I say day one, the previous red candle, sellers are in control. And if you see day two, buyers completely took the control that has been set by the sellers. So this complete swallowing of the previous price action signals a major shift in market sentiment. So how do you take confirmation? So close above previous high plus volume spike. So look for a close above high of the engulfing candle and a significant volume spike to confirm the uptrend. So there are some setup conditions. So it should occur after pullback and it should come at the support level and there should be strong volume on green candle. So larger the green candle, engulfing candle to the previous red candle, the more powerful the reversal signal is likely to be. You should always check the volume histogram. A true bullish engulfing should have a significantly higher volume on the green candle than the red one, indicating high conviction from the buyers. So sometimes there can be a trap. So how do you need to check the trap? So it occurs during sideways market. The pattern carries its highest probability only when it occurs at the bottom of a clear downtrend. So let's look at the example. So there was a clear kind of a downtrend that happened and the bullish engulfing, and this is our stop loss entry and this is how we need to ride the market. Okay, so let's move on to our next candle. So which is bearish engulfing. So bearish engulfing means strong reversal. Okay, so this is completely opposite to bullish engulfing. So bearish engulfing pattern. So it is a strong signal that an uptrend is over and the losing momentum of buyers and the reverse and sellers are taking charge. So this is a two candle setup. So it features a small green candle immediately followed by a large red candle. So that completely covers or engulfs the body of the previous one. So what is the psychology behind it? The reflect shift from buyer dominance to aggressive selling pressure. While buyers initially had control, the next section opens higher only for sellers to step in and push the prices down significantly. So where is the best location for this? The pattern is most powerful at the top of an uptrend or major resistance levels indicating potential peak. See, never jump in before the second candle finishes. A true bearish engulfing requires red candle's body to close below the previous green candle's open. So look for a confirmation candle that closes below the low of engulfing red candle to increase the probability of a successful trade. A high probability setup is often accompanied by a volume spike on large red candle signaling high conviction from the sellers. So if it happens during the sideways market, so ignore. So you need to ignore all the patterns that happens at the sideways market. Okay, so you can see some example here in engulfing is happening and the market is slowly coming down. Okay, so let's move on to our next candle, which is morning star. So these are the names given to the patterns, okay, so that it's easy to remember. So what is morning star? So morning star is nothing but three candle bullish reversal. So what I mean by three candle bullish reversal, so I'll explain here. So which signals the transition from downtrend to a new bullish phase. Okay, so how the structure looks. So it begins with large bearish candle. So followed by a small body, often doji or spinning top. So that ideally gaps away from the first. So the pattern completes when you get a strong bullish candle that closes significantly into the body of the first red candle. Okay. So what is the psychology behind it? So this reflects the intense selling and followed by a stalemate, followed by a decisive surge of a buyer control. Okay. The signal is most powerful when the third green candle closes above the midpoint or at least 50% of the first red candle. So you understood the structure, you understood the psychology, what happens in the first three candles, and when to take the confirmation and when to get the best location. Okay, so what happens if there is a gap? While not always present, like a downward gap between first and second candles followed by an upward gap, so which creates abundant baby variant, which is even more potent reversal signal. So you need to watch the volume bars very carefully. What happens? A valid morning star should see a noticeable increase in the volume on the third green candle, confirming that institutional buyers are entering the move. So why I am saying institutional buyers here? Because you can see the volume. Only when we get such volumes, which means there are big players jumping in. So this patterns is only a buy signal if it forms after a sustained downtrend or at a major support level. If it appears in the middle, as I said, often ignore because that is just a noise that happens at those levels. I will also show you one example. So morning star. So there are different types of patterns and this is one of them. You can see the first red candle, then the doji, then the green candle, which is more than 50% of the red candle. Okay, so let's move on to our next topic. Similar to morning star, so we have an evening star. So what is evening star? So this is a three candle bearish reversal. So what I mean by reversal here, so let's try to understand. Signals, this is a signal which marks a potential end of an uptrend. Okay, so what is the structure and psychology? So candle 1 will have a large green candle, so representing large buying momentum, and then there will be a doji, so sometimes it will be gap up. So this indicates a tug of a war where buyer strength is fading away and the market is passing. And what happens in the third candle? A large bearish candle that closes deep into the body of a first green candle, confirming that sellers have seized the control. So what is the high probability setup? So the signal is significantly stronger if the third red candle closes below the midpoint of the first green candle's body. A valid reversal should show a clear increase in selling volume on the third candle, indicating high conviction from the bears. So the pattern carries most weight when it occurs after an overextended rally or near major resistance zone. So you should also avoid the trap which happens during the sideways market and always wait for a confirmation and see the volume. Be cautious if the pattern forms immediately above a major support level or if the third candle has a very low relative value, as these are signs that reversal may lack the power to follow through. So what I mean, so if there is no follow through, so no use of using these candles, so you can ignore. So let us look at the example. Yeah. So this is evening star, three candle bearish reversal. First green candle, then we are getting an uptrend which has been lacking follow through. Then the third candle bearish which is closing below the green candle. Okay. So inside bar. So what is inside bar? So inside bar is a breakout setup. So this is a premier strategy for capturing high velocity moves that follows periods of market consolidation. How the structure looks: the mother bar, a large preceding candle that defines the current trading range; the inside bar, a smaller candle whose entire high-low range is contained within the mother's range. So you can assume the first is a mother and the second one as a baby. The inside bar, which indicates lower high and higher low, signaling that market is consolidating. Okay, so what is the market psychology? The pattern represents a period of indecision or tug of a war where the energy is building. Think of it as a coiled spring. So the longer the consolidation, the more explosive the eventual breakout is likely to be. So how is the entry? Bullish setup. Buy when price breaks and closes above the mother's bar high, so which is a big candle. And what is the bearish setup? Sell when the price breaks and closes below the mother's bar low. Volume confirmation. A valid breakout should be accompanied by a surge in volume, confirming that institutional big money is behind the move. So volume is very very important. And where do you need to place your stop loss placement? A common defensive placement is just on the opposite side of a mother bar, or for a tighter risk reward ratio, the opposite side of an inside bar itself. But you need to know like where to exactly place based on the setup. Says there can be trap as well where it opens above or below the mother bar only to reverse and close back inside the range. So always wait for a full candle close for confirmation. Sometimes you will see multiple bars inside a row. So this is sign of extreme volatility contraction and often leads to most significant trend. So there can be 1, 2, 3, 4 bars inside an high mother bar, and then there can be breakout. You can usually see these kind of an setup in Nifty and Bank Nifty. So inside bars are most profitable when traded in the direction of a dominant trend on a higher time frame. So time frame is also very very important. So usually you need to see day time frame. And if you want, if you are a day trader, you can also look at 1 hour or 2 hour time frames. Okay, this is an example. So you can see like there are two bars inside that mother bar, and the third bar is broken, but it has gone inside that bar itself. But if you see the fourth bar, it is going below the mother's bar low. So this is the setup. As I said, so it can be more than one inside bar. Okay. So, which is our last setup? We call it as Marabuzu. So, I am not explaining like how the name came because our focus area is only to understand how the structure is, the psychology, how to trade it, how to get the confirmation, and how to trade during the live market. So if you want to understand like how did the name come, so you can just Google it so that you will get a complete idea of it. Because I don't want to waste time explaining the name now that they have already kept the name. So let's focus on the topic. Marabusu candle, the ultimate symbol of one-sided momentum and total market dominance. Marabuzu candle. So which means the market is in uptrend, so it is giving bullish confirmation, and the second candle that happens after it, so which will give us the confirmation. Okay, so what is the structure? So Marabuzu is characterized by notably large real body with no or extremely minimal wick. This means the opening and closing prices were absolutely high or low of the session. So this pattern screams unidirectional momentum. So that's why I said it is in the momentum, and you need to just utilize that momentum for your trade setup. It shows that one group, either buyers or sellers, control the price from opening bell to the close without any significant opposition or pullbacks. So bullish Marabuzu. So what you mean by bullish Marabuzu? It opens at the low and closes at the high, showing intense buying pressure throughout. And what is bearish Marabuzu? Opens at the high and it closes at the low, signaling significant aggressive selling pressure. Okay, so how do you take the breakout confirmation? A Marabuzu breaking through a major support or resistance level is a high conviction signal that the breakout is real and likely to continue. So there is a resistance, and if market is breaking that resistance, which means Marabuzu candle is forming, and you need to ride the trend. You can see the trend continuation happening. So seeing this candle in the middle of a trend confirms that momentum is continuing. So whatever the candles we have learned before, so we are seeing that it might get reversal, but Marabuzo is a momentum continuing candle or trend continuation candle. So after consolidation, so this usually happens after a tight range or a consolidation period. So the larger the Marabuzu candle relative to recent candles, so the more significant the momentum shift it represents. So you should always see this with the volume spike and high relative volume. So there can be gap factor as well. In fast moving live markets, the prices will often gap in the direction of Marabuzu and the next candle. So the traders should look for a minor retest of Marabuzu closes as a high probability entry point. And stop loss, the most logical stop loss is just at the opposite end of the candle body. So this can be a huge stop loss for you. There might not be good risk reward ratio, but what you can do during those candles, as soon as the candle breaks the subsequent candles, right, you can shift your stop loss by looking at the market. So now you know how to trade Marabuzo, what is the structure, the psychology, when to use, how to trade it, what kind of a failures or a red flags that happens, and in a live session how to continue it. Okay, let us look at one example. Yes, you can see here. So the momentum is continuing after this. You can see big one candle, then there is a stop slowly and the right continues. Okay, so there are multiple Marabuzu that is happening in this chart. Okay, so now we have learned different types of candles. Okay, and the different types of candlestick patterns. So few are related to sideways, indecision, and few are related to momentum continuing candles, and few are related to reversal. So it can be bullish, bearish. So usually patterns don't alone give edge. Okay, so when do you get edge? As I explained in the pattern itself, you need to see the pattern, you need to see the level. So what I mean by level, support, resistance, ADRs, you need to see pattern plus volume, you need to see pattern plus trend direction, and you need to see pattern plus risk management, because this is also very important. If it is just giving 1:1 ratio profit, then no need to write the trend. I will explain it once again. Professional insights. Patterns don't alone give you edge. When do you get edge? When you have that pattern plus the levels plus the volume plus the trend plus the risk management. Yeah. So thanks. And if you have any questions, you can just put that in the comments. If you just have any topics that you want to discuss, you can let me know in the comments. Kindly like and subscribe to this channel for more videos.